Gerald Lucas here with another installment of Ask Gerald, where you get your real estate questions answered. Today's question comes from D, and D writes from Vauxhall, New Jersey. And D writes, I'm a real estate investor. I need a mortgage loan, but I'm having trouble getting a conventional loan like the one I got when I had a regular job. What can I do? Well, that's a good question, D. You know, DSCR stands for Debt Service Coverage Ratio. And DSCR, or Debt Service Coverage Ratio mortgage loans, are a kind of no income verification mortgage loans that allow landlords and real estate investors to get mortgage loans without forking over a lot of personal information like tax returns and W-2s. And the way DSCR, or Debt Service Coverage Ratio loans work is it allows people who own income generating properties to use the cash flow from those properties to qualify for a mortgage loan rather than qualifying based on the borrower's income. So the real main benefits of DSCR loans are ease and speed. So it doesn't take as long to qualify or to close. And landlords and real estate investors often find themselves in this situation because as a result of the deductions from their properties, deductions lower their taxable income. So it's often difficult for them to demonstrate a lot of net income, which makes it more difficult for them to get a conventional mortgage. So again, DSCR loans are a type of non-income verification loans that allow landlords and real estate investors to get loans based on the cash flows, not based on the borrower's income. As with any financial instrument, there are drawbacks to debt service coverage ratio loans, one of which is usually high down payment. Another drawback is higher interest rates. So normally you're going to pay a higher interest rate on a non-income verification loan like a DSCR loan than you would on a conventional loan. In addition, there's usually prepayment penalties with DSCR loans. So it's not the kind of loan you want to get short term, or if you think you want to pay it off quickly. And lastly, you cannot get a debt service coverage ratio loan on a primary residence. But for many landlords and real estate investors, those kind of no income verification loans are very useful and gives them access to pull money out of income generating properties that they own. So thanks for your question, D. For more real estate tips and information, visit my blog at geraldlucas.com. I'm Gerald Lucas, and I'll see you again soon.